It's time to do business again. 55 minutes around the world of business here on Business Incorporated. This is what we have prepared for you. We'll look at the impact of Israel-Iran war on Nigeria, especially when it comes from oil. African cross-border trade. What's the real situation? Looking at the territories. And Egypt's drive for solar energy gets a boost. Good afternoon, everyone. I'm Ini John Mekwa. Let's start business from the foreign scene or the global scene. The run-up in crude oil features. That's paused on Monday, even after Israel struck 2 natural gas facilities in Iran over the weekend, raising fears that the war will expand to energy infrastructure and disrupt supplies in the region. We look at the numbers for this afternoon, unlike what we had in the morning. It's in red. So for Brent, it's 0.8% down, and then bringing it down from 74 we had earlier today to $73.65. WTI is also down 0.7% to $72.47 a barrel. This was about 73 earlier today. Israeli unmanned aerial vehicles struck the South Pars gas field in southern Iran, according to Iranian state media reports. And the strikes hit 2 natural gas processing facilities. According to the same source, it's unclear how much damage was done to the facilities. South Pars is one of the largest natural gas fields in the world. And Israel also hit a major oil depot near Tehran, and Iranian missiles, of course. There has also been a retaliation. Meanwhile, damaged major oil refinery in Haifa. That is what they have also damaged. And the attacks continued for a 4th day today, with Israel claiming to have achieved aerial superiority over Iran. According to military spokesperson, the war has entered its 3rd day with little sign that Israel or Iran will back down as they exchange barrages of missiles fire throughout the weekend. Iran is considering shutting down the Strait of Hormuz. However, some analysts are skeptical that Iran has the capability to close the strait. And reacting to that, the Crude Oil Refinery Owners Association of Nigeria, they've been talking about that. But first, there's also that reaction from CPPE. They're weighing the gains and the losses for Nigeria amidst the Iran and Israel war. Of course, we know that this will increase revenue for the government. But on the other hand, there's also the threat or the possibility of increase of pump price. And the Director and Chief Executive Officer of CPPE, Dr. Muda Yusuf, is asking that the government should weigh in to balance these 2 uncertainties. And still on that, the Crude Oil Refinery Owners Association of Nigeria, CORAN, they believe that a modified and effective crude for Naira policy can be a buffer for Nigeria at a time when global crude prices are surging. The Publicity Secretary of CORAN, H.A. Idoko, who was a guest on Business Morning earlier today, says that domestic refiners of not just PMS but also other products should be given priority.
When you're doing local supplies, you're cutting out the exposure that freighting would give you as an economy. So you cut out the high rise of cost in freighting, because right now shipping has jumped by almost $1 million if you are moving through the Suez Canal, as the case may be. But if you are doing a local transaction now, you are cutting out the cost of freighting. Then in terms of the Naira for crude, we had actually said that rather than use international pricing templates for local refineries like the Brent or WTI, we should identify a local Nigerian pricing template. So when you are dealing with the local refineries under a protectionist program, you are giving us a fixed price that will not be affected by whatsoever is happening in the international market. And if this is implemented fully, we should have some level of stability in terms of our local supplies.
Still in the oil and gas space, Dangote Petroleum Refinery has announced plans to begin the distribution of premium motor spirit, that's petrol and diesel, to marketers, petrol dealers, manufacturers, telecoms firms, aviation and other large users across the country, with free logistics to boost distribution network from August 15. To ensure smooth takeoff of the scheme, the refinery says it has invested in the procurement of 4,000 brand new compressed natural gas powered tankers. This phase of the program, they say, will continue over an extended time frame. The refinery is also investing in compressed natural gas stations, commonly referred to as daughter booster stations, supported by a fleet of over 100 CNG tankers across the country to ensure seamless product distribution. The company says this is an evidence of its commitment to eliminating logistics costs, enhancing energy efficiency, promoting sustainability, and supporting Nigeria's economic development. They say under this initiative, all petrol stations purchasing PMS and diesel from Dangote Petroleum Refinery will benefit from this enhanced logistics support. Meanwhile, the Petroleum Products Retail Outlet Owners Association of Nigeria, PETROAN, has raised concerns about Dangote Refinery's forward integration adoption, warning that it could lead to a monopoly in disguise and pose a significant job loss threat to Nigeria. With a production capacity of 650,000 barrels per day, PETROAN believes that Dangote Refinery should be competing with global refineries and not operating as a distributor in the downstream sector, citing concerns that the company may leverage its market power to fix prices, limit competition, and exploit consumers. PETROAN warns that this could lead to a massive shutdown of filling stations across Nigeria, resulting in widespread job losses. Well, I guess we'll leave the oil and gas sector for just a bit and go to what's happening in metals. Gold rose for a fourth straight session to a near two-month high on Monday as intensified clashes between Israel and Iran over the weekend stoked fears of a broader regional conflict, pushing investors towards safe haven assets. So we see the numbers. Spot gold is up 0.3% to $3,442.09. US gold is also up the same percent at $3,461.90. Spot silver is unchanged, remaining at $36.29. Platinum regained from the loss, the drop it had on Friday, and is now up 0.4%, $1,233.87. And palladium is also up more than 1%, 1.3%, to $1,040.96. And we know that all of this is precautions against further strikes coming from Israel and Iran. And US President Donald Trump has said he hopes Israel and Iran can broker a deal. But he said sometimes countries have to fight it out first. That's the view of President Donald Trump. We come back to Nigeria earlier today during Business Morning, spoke to Princess Okowo from the manufacturing sector, and she expressed some of the pains that manufacturers are facing in the midst of the reforms in Nigeria.
At the ports. Now it has gotten to a stage that they will be telling you for this iPad, oh, you bought this iPad 100,000. Are you the manufacturer? You are customs. And they will put their foot down that 100,000 must be paid, calculated into millions. Where do we pass this cost? They are just heating up the economy. I mean, manufacturing is the bedrock of every economy. But all this thing is frustrating. Congestion at the ports, not because we don't want to collect our consignment, but because of the customs wants to put all these costs down our throats, either we like it or not. And we have to pay. Because we are at their mercy. They'll say, oh, if you want to contest, yes, you have the right to contest, but go to Abuja. Before you go to Abuja, contesting, coming back, you have demurrage. demurrage with the shipping company, demurrage with the ports authority. All these costs, they should allow manufacturers to breathe. The atmosphere is tense. We need encouragement, not frustration. We are not rogues. We are doing genuine business to build Nigerian economy.
That's the managing director of FAY Limited earlier today during Business Morning. Now, talking about trade now, but let's look at it from a wider perspective, the African continent. We've been talking a lot about promoting intra-African trade. Well, let's look at some of the realities of that now, and we're doing that with our correspondent, Channels TV Sahel correspondent, Musania Liu, currently in Burkina Faso. Good to have you on the program, Mo. How is it there in Burkina Faso? How is trade? How is business?
Thank you for having me on your show. Burkina Faso, it's quite okay. Only thing I can say is that the weather is a bit on the harsh side. It's dry and dusty. Otherwise, everything is okay.
All right, so you've done a lot of road travel, especially between Nigeria and those neighboring countries. So first of all, the issue of porous borders, you've seen it firsthand. How bad or not so bad is it?
Well, it will be interesting for me if I tell you that the borders, the land borders across most of the African countries, even including the ones I have been to, are actually very porous. The fact of the matter is you can get into Nigeria from any of the countries that are bordering Nigeria through more than a dozen paths. And some of these paths are not monitored, are not manned by any of these immigration or customs officials. There are too many. We have open borders across Africa. And on my way to places like Cameroon and Chad and Sudan, I have seen that. I've traveled across that part of the world several times by road, and I can tell you that traveling across Africa by road, in some places you wouldn't even know you have crossed into another country. That is how porous and insecure our borders are.
So, you know, when it comes to trade, because we've been talking a lot about the cost of traveling within the continent, and if you want to do it legally or by air, then you say how expensive is it? But when you now say you can even cross to other countries without even knowing it, I wonder if it's also being used for trade.
Well, it's interesting that you should talk about the cost of transportation across the continent. If I tell you that it is easier or cheaper for you to go to France, to fly to France from Nigeria than to fly to N'Djamena, Chad. From Maiduguri in northeastern Nigeria to N'Djamena, the capital of Chad, is just 270 kilometers. But if you want to fly there, you will have to pay 3 million naira to get there. And you can pay $1.5 million to get to Paris in France. This is how terrible it is. There is virtually no agreement between African countries to, except for a few of them, for countries, to fly to each other's capitals. Anytime you want to leave an African nation and go to maybe the second or third nation from it, you will have to go to a European nation, take a connecting flight, and then fly back to Africa. Some of my colleagues in the past who wanted to go to Niger from Abuja. Niger is the capital of, Niamey, the capital of Niger, had to fly to Turkey first to take a connecting flight to Niger, which is simply preposterous. So these are some of the things that make it very, very difficult and very expensive for anybody who wants to travel or to do any trading across these borders.
Yes, I mean, it's for me, I don't know, it's contradictory. So you said about more than 1,000 parts, unmanned parts, that one could use to get in and out of Nigeria, and they are unmanned.
Yes.
So obviously it is the issue of insecurity that has stopped trading from going through those parts. And then, of course, when you look at the alternative, you just talked about the costs.
No, there are many other factors. One of them is the poor infrastructure along all the borders I've been to. I've been to 17 African countries, and I can tell you only the borders between Nigeria and Cote d'Ivoire are maintained, have more terrible roads. All the other ones I've been to have no roads. An example is between Maiduguri and Cameroon through Gamborungala in the northeast. It's about 100 kilometers, but there are no roads. Forget the issue of insecurity. No road networks exist. No internet companies. They do not have their services there. So once you leave Maiduguri, just an hour after you leave Maiduguri, you're out. And that's the same thing from across all the borders. No roads, no infrastructure, and therefore traveling across such places takes a lot of money. You have to invest a lot of money because the vehicles themselves that are supposed to take these goods across the borders charge you had been there, or if infrastructure had been there. An example is from Lagos to Accra, Ghana. It's just 465 kilometers. But because of other factors like the overstaffing, you know, from Nigeria, if you are leaving the semi-border, you will find out that there are several checkpoints manned by the Nigerian authorities to check incoming and outgoing traffic. The same thing applies in Togo, Benin Republic, and Ghana. In fact, from Aflao, the Ghanaian border with Togo into Accra, which is simply about 50 kilometers, takes about 4 hours. These are some of the issues, you know, a lot of bureaucracy, lack of infrastructure, of course, as you said, insecurity. There are other things like high tariffs. Whenever you bring something into Ghana, as an example, the Ghanaian authorities will charge double. They will charge you double for bringing something in, whether it's from an ECOWAS nation or from any part of Africa. These are some of the challenges traders are facing and businessmen across our borders, especially in this part of the world.
All right, Mo, so I mean, with this picture you've painted now, it does seem like the talk about promoting intra-African trade ends with talks or ends at the talk levels. Because if these avenues are there, and you did say the connection there is flowing freely, except for the fact that there's been no intentionality in the infrastructure and making these trade routes. So perhaps all this AFCFTA talks we're having is just artificial.
Exactly. This African Free Trade Agreement that's been signed was designed actually to make African countries, you know, find ways of trading with each other. We've got everything we need to trade with each other, but some of the other factors I haven't mentioned that threaten this agreement itself, that is the non-convertibility of our currencies. You understand that across Africa, almost 17 to 20 different notes, paper notes are in use, and they are non-convertible. You cannot take Kenyan shilling and convert it to Naira. You cannot also take the Ghanaian cedi and convert it to Sefa. So there are so many difficulties there. If you've got money, you will have to find a way around it. You will still have to involve the US dollar, the euro, or the pound sterling somewhere along the line before you can get your money across. And that increases the cost of doing business. So the agreements are there. African countries simply need to have the will, the political will, to enforce them. And then they need to also make sure that they have infrastructure in place. All these borders need to have motorable roads and adequate communication networks across them.
I suppose in routes like this, those food routes, the talks about perhaps, the system where every African country can actually trade with their own local currency with another African country. I suppose that system hasn't penetrated that area.
No, it hasn't. I'll give you a simple example. This affected me when I left Nigeria and came to Ghana. I had some naira notes on me, and I wanted to get. First time when I arrived, I needed Ghana cedis to move around. So I brought out my naira and I decided to go out into the city to see if somebody could change that, for Ghana cedis for me. I couldn't find one. I went to several places. All of them said no. The only thing I could do was to go to these non-official forex traders. They have accounts in Nigeria. You transfer money and then they give you equivalent value in Ghana cedis. So this is what actually happens across this. So governments, authorities across Africa are losing out. They don't even know the actual number of the figures concerning the volume of trade that is going on between their nationals, because everything is being controlled by the private sector. The governments are absent. They only bother themselves when you're following the known routes. They collect custom duties and tariffs. But I am telling you about more than 50% of all the goods that move between African countries go through unofficial routes. This is what is happening.
So what are some of the commodities that are traded through these unofficial routes?
Okay, from northeastern Africa, we have hides. Sudan, Chad, South Sudan, they've got a lot of livestock. So our Nigerians travel by road from Nigeria all the way to Sudan to buy dried cow hide. You understand? And then they put them on trucks and drive them across these borders, several borders, to get to Maiduguri. And Maiduguri is actually the capital of this trade. I've been there. I've seen several businesses with warehouses filled with hides and skins. So they bring those into Nigeria, and from Nigeria, every consumable product you could imagine, from drinks to cosmetics to foodstuff. Nigeria exports almost all of these things to all the countries in West and Central Africa. You can find in Central Africa, in the Central African Republic, in Chad, in Sudan, you can find up to Eritrea, you can find Nigerian products being sold in shops there, and people take them, through those unofficial routes and sell them over there. They make a ton of money because, like the CFA and the Ghana cedi now, they are so powerful compared to the naira. So if you buy anything in Nigeria and you take it to Chad or Sudan, you can sell it for 3 times the actual amount. A bottle of Coke, for example, costs about 500 naira to the consumer in Nigeria. But when you go over to Eastern Chad or Sudan or South Sudan, it costs 1,700 naira a bottle.
So obviously, these are avenues through which the government is losing out on taxes and, just using these avenues to boost the revenue that we're looking for in the country.
Yes, that's why I said earlier that governments need to change the way they operate. Apart from writing and signing agreements, they need to provide infrastructure and enabling environment for trade to thrive. There is no use having all these agreements and then you find out that you are losing 70, 80, 60% of the tariff charges that are supposed to come to you, because people just take one of those difficult to monitor hundreds of routes that exist across these borders. They just use them on trucks, on bikes, on donkeys, on foot, on motorbikes, and they cross into these countries and supply these products. Diesel from Nigeria, last time I traveled to Eastern Central African Republic by the border with Sudan, I saw diesel from Nigeria in drums that has been shipped from Chad through Cameroon, to Central African Republic, a distance of almost 4,000 kilometers. This is how it is. The governments of Africa seem to be operating like the ostrich. Their heads are in the sand. Some of them know what's happening, but there is no political will to fix the problem. That is, I have spoken to a lot of people, businessmen, who want to travel across and do businesses, legitimate businesses, who want to go in to these neighboring countries across Africa, purchase products and bring them back. But the challenges facing them are enormous. You will have to you have to operate under the radar if you want to actually bring anything into any country or outside any country. The official routes are very difficult to follow.
Yeah, unfortunately, official routes are difficult to follow, and there are so many unofficial routes which, illegal or uncaptured trading is going on every day. Well, thank you so much, Mo, for your time, and do stay safe as you make your travels round, and I'm sure we'll get you on the program very soon again.
Thank you so much for having me.
You're welcome back. It's still Business Incorporated here on Channels Television. Let's head to the markets now and see what intraday numbers look like with Will Ibon. Will.
Just listening to the conversation you just had, I know it put you in a very tough position, sensitive spot there, especially when it has to do with Africa. I know you're very passionate about Africa working together, and we're hoping that the government listens and maybe not throw it out to prayer, like we had our Minister of Agri to say that, but let's just hope that we actually work.
Will, you have the floor. I'm not a part of this conversation.
No worries. Let's see what major markets are doing at intraday. Well, say they were negative. We saw the NGX kicking off the week in the red with the all-share index down about 0.2%, now down about 0.14%. Last time I checked. And this was after shedding about 88 basis points earlier in the session, pulling back from Friday's high, which was above 115,000 points. Now, the decline follows a new CBN directive ordering banks under regulatory forbearance to halt dividend payments, defer executive bonuses, and suspend offshore investments. Banking stocks are broadly lower in response to this. We see them in the red today at intraday. Now, let's look at South Africa. JSE in South Africa was also down at intraday 1.76%. Elsewhere, Egypt's EGX was also down 0.28%. You can have that on the screen. And we see Nairobi Securities Exchange bucking the trend. Positive sentiments we're having all week last week, but it closed Friday in the red, 0.16%. Well, let's dig deeper and see what's happening on the floor of the NGX. And we have Ambrose Omodian, Chief Research Officer, Invest Data Consulting, joining us to share his details. Good afternoon, Ambrose. Good to have you on the program.
Yeah, good afternoon. Thanks for having me.
Ambrose, on Friday, the NGX index formed a classic double top. You mentioned that double top pattern. That's a signal of a potential reversal. With this CBN directive hitting at such a critical point, is this a genuine pullback we're seeing or a false breakout?
Personally, I would say this is kind of a coincidence. Yeah, the market has formed, a double top already before the news came to the market about the circular to the banks, and that also kind of triggered the pullback. So for one thing, that the market is still trying to resist that decline. We see that some of the banks that even were selling lower than what we're seeing now at this hour came down, and also they are rebounding. I think yes. Actually, this is the chart, and I agree with you, this is the chart that shows that the market is ready to kind of pull back. We call it either a reversal or kind of a continuation. But at this point, when you see kind of a double top, says that market is waiting for either a breakout at this point for a pullback. And when I saw the pullback today, as a result of what I was saying earlier, the market reacted to the circular from CBN. But one thing in that circular that I think investors should also be very careful with is that when they release the circular, CBN did not point any bank or mention any bank in that circular. But there's a research from Research, if I'm correct, and the research they did back 27th of May, where they mentioned some banks that having forbearance and all those stuff. But in CBN, the notification, nothing like that, and that has been circulating on the media, both the social media and the print media. And that has sent a kind of panic to the market. But for me, on this platform, I would say that market players, investors should not panic Because one, for us, I was expect to see the inflation figure today. I don't know that it's out, at least our check is not out. That inflation figure also give us an insight to what we're expecting. And we have seen the macroeconomic data in this nation that are pointing to a direction. If at the end of the day, no, there's a light at the end of the tunnel, I see market continuing this trend. But knowing that the banking sector is a major sector in the market or subsector in the market that really have poor activities coming down to reflect on the index. But today we see that the life of fixing, WAF, Nigeria Brewing, MTN, and me and Baker have supported the market. By now, we see the market have been in total red, but I see the market has to resist. Like for me, let's wait and see what will happen tomorrow ahead of all the early season that will start in July. Don't forget that this figure that came today give us an insight whether we're likely to see either a rate cut at the end of the coming MPC meeting in July. These are things that we have to look at. And also, let's see how the fixed income rate will continue. If it continues to remain where it is, the signal that we're going to see a rate cut that will kind of support the market upgrade. For this news, I think that also CPN should come out and clear the way for investors to find the direction. And also a signal that the regulators are not working together. When I mean regulators, talking about the PETROAN, the regulators for insurance sector, one for step forward for capital market investors, and then the bank, because these are financial, regulators that work as a team. The news of this, if they are put together, I think this circular will not come up at all, because it will send kind of a negative sentiment that we're already seeing until the CPN come out to explain the reason why. And also, if you go back and look at the state of Nigerian banks, most of them have hit their capitalization. Some of them have surpassed the 500 billion. At the same time, they are having to retain earnings that are more than even 2 trillion to some of their balance sheet. For me, I think there's a lot the CPN can do with all these, all these forbearance are taken care of. They are coming to let the public know, set the signal, kind of the panic to the market. Yes, it's good that they are regulators to protect everyone in the market or in the economy, but I believe that there's a way we regulate will not send a signal of fear to the people that we are trying to protect. I think this is why the two bodies have to work together. The PENCOM with the regulator for insurance, YSEC and CPN, so that anything they are pushing out to the public, send that yes, I will boost confidence, not that will send panic as we are seeing now. But I believe that CPN should go back to the table, sit together and clarify and make the whole thing together. But speak now, what the special company have done is what is sending all this negative statement. But from the main circular from CPN, they didn't mention any banks, and only that the fear there is that they will suspend their dividend, not that every investor looking up to work for dividend, because these investors have invested back in these banks with their public offer right issue because of the confidence they have in those banks. That's why they invested. But also, CPN have told us that the banks are stable and strong. If investors have put money back to this bank, they hope that make money, that's for dividend, spend that dividend, and that's why there's all this confusion. CPN need to come out and clear.
Yes. Okay, so while we wait for the CBN to clear this, we definitely know that dividend is one of the major sources of income for most investors in Nigeria. This is where they get their income, their daily living. So now that the CBN has said, we know that the banks are definitely spooked right now. Do you see this continuing, this pullback continuing for banking sectors, pending when the CBN clarifies which banks are involved in this? Because like you mentioned, Access and Zenith Bank, they've already met their recapitalization requirement. So where does the banking sector stand as we speak?
Yeah, for me, this is time that the Nigerian investor has to also apply what we call the technical and also the fundamental. These banks are robust enough, and technically a pullback is an opportunity to buy back, buy to a lower price. But because we just said no time frame has been grown for them to respond, but I believe that in the economy where confidence is coming gradually and we are seeing indicators point to where they are going, it is good for the regulators to make it snappy and come even before Wednesday or before this weekend and let them come out and say this is where we are going to, this is what I say. That will boost confidence again. And for me, I'm not afraid that the price is dropping because these banks, from other indicators we have seen, they are solid. A pullback is an opportunity for you to buy, especially if you are a long-term investor. For traders, it must kind of affect your trading goal. But not to stop like that's why I said, before you buy any stock, you must have your stop loss, you plan your trade. If it's going on, you just have to protect your capital, you pull out and go to for traders. But for medium and long-term investor, put your position now because banks is the engine of any economy, and our banks are solid now. The calculation was saying. Yes, that's just pay methods to know. That's why investors have to put more money in those banks because of the confidence they have the regulator have said these banks are solid. But coming out to say they should not pay investor dividend, for me, it's not the right way to go, because they're already sending back signal for those that have invested their hard money, but if there's really what they to earn a kind of return, I think CBN should come out and clear it. That's the thing I would say. For the time, I can't give time to it.
Yeah, it would be great to have that clarification from the Central Bank of Nigeria. But just one word, red or green for today, Ambrose. No long talk, just red or green.
For me,
just red or green. That's all I just want to know.
Let me say green. Green, I feel like green.
Green, definitely. I will look out for that green clothes. Thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting.
Thank you.
Now, on the other hand, major stock markets in the Gulf rose in early trade today, Monday, recovering from some of the losses in previous sessions where they were rattled by the escalating conflict between Israel and Iran. We see Dubai up 1.11%, Abu Dhabi also up 0.31%. Still within the region, Saudi, that's the Tadawul exchange, it was also up 1.68%, and the Xari index was up 1.73%. Now look at the U.S. now. Stock futures edged higher on Monday, also recovering from that, rattle, Israel, Iran strikes. After oil prices also cooled following the strike we just mentioned, So you see the Dow futures rising 0.4%. To 42,698 points. S&P futures also up 0.4%, and Nasdaq futures up 0.57%. Investors are eyeing the upcoming manufacturing data and Wednesday's Fed's decision, but markets expect no rate change despite President Trump's pressure for a cut. Now, rising oil prices are also seen as limiting the Fed's room to ease the policy. Let's look at Asia, how they performed at the close of business today. Investors assessed, the escalating Israel-Iran tensions and also the slew of data from China. China released their retail sales data today. We see the Nikkei up 1.26%. Actually a green market for the a green close for the Asia markets today. Kospi 1.8%. Hang Seng also up 0.7%. Let's look at mainland China. I'll see how they performed after that retail data they released, 0.35%, and Nifty 50 up 0.92%. It's a great one for Asia markets, especially as they were spooked last Friday that they're back in the green, and hopefully they'll continue in the green. Markets are looking good for U.S. and Asia right now. Nigeria now in opposite direction from what we had on Friday
last week. So it's only natural profit taking comes in. But I think the biggest news this week is Jerome Powell's job safe. After Wednesday, we don't know what's going to happen
if he cuts rate or if it doesn't cut rate.
Yeah, this is where we need to pray for him.
Oh, goodness.
All right, Will, thank you so much. Well, let's stay with the markets now and head to Europe with Lars Holter letting us know what's going on. Hi, Lars. Good afternoon. What's going on with the markets? We're just talking about the threats to Jerome Powell's job if he refuses to cut rates, according to President Trump.
Well, yeah, that's been the big talk for a while, of course, here as well as on other markets, mostly, of course, Wall Street. Is Trump just threatening again? Is going to be an empty threat or so? We don't know. It's obviously one of those many, many topics. We just have to keep at the very back of our minds right now. The main topic, and that's, of course, another problem that we have seen running down those other markets here before, just earlier now. Another problem on investors' minds in Frankfurt as well is, of course, that further escalation over the weekend in the Middle East. We've seen it now for 4 days or so, Israel's attacks in Iran and then the responses and what it all does to the oil price. And you just said it, or we just heard it, the oil price down a little bit today. But of course, people are anxiously keeping an eye on that because crude generally is up, and a lot of people are worried that these price increases could not just be temporary, but maybe that they might be persistent, and that, of course, would become a major problem for the world economy. If we're looking at the indices, we're seeing them all in green, pretty much adding some of that same color to your board here. Frankfurt up 0.5%. The FTSE 100 in London up 0.5%. The CAC 40 in France even up almost a full percent. But we have to see also all of these indices last week saw some relatively deep losses. So we're pretty much recovering a bit from that.
All right, and then switching gears now, European Union is talking about cutting down on smoking. wonder how much of a problem is that, and why are they even thinking about this?
Yeah, they're doing here what governments often do best, use taxes as an instrument to control how people behave. But, before we get into the details, let me give you that important number here on smoking in Germany. According to latest surveys, it's almost 30% of adult Germans that are currently smoking, 28.8% to be precise. Men, a little more than women, young adults seem to smoke the most. And now, besides being bad for your individual health, smoking is obviously also bad for the economy. In Germany, around 125,000 people die every year due to the effects of smoking. There is mostly, of course, lung cancer, but other illnesses as well. And the healthcare system is spending billions on these patients. Cancer is, of course, extremely expensive to treat, and it doesn't just cost money, but every smoking-related cancer case, of course, takes medical resources away from other patients. So if we were to see fewer smoking and fewer cancer cases due to smoking, it would free up resources in our healthcare system financially and also with regards to personnel. Also, there are other ways smoking is costly. Littering would be one of the major issues we're dealing with. Someone has to clean those cigarette butts off the street, not to mention the environmental damage from toxic chemicals being washed into the soil and the water. All in all, the damage smoking does to the public is immense, and that's the reason they're trying very hard right now to decrease it.
So I wonder what the tobacco industries are doing, because there's also jobs. They also give jobs. So
Yes.
there's also that to consider.
Of course, Ini, as you can imagine, the industry here is not thrilled. Just talking about this latest tax initiative with raising taxes on tobacco, the Association of Cigarette Producers are saying immediately that protecting public health should not be used as an excuse to simply raise taxes and threaten business and to threaten jobs. It's an old discussion, of course, and it raises a moral question. If your business is harming others, does it deserve the same protection or support other businesses are getting? I think not. I mean, if your product kills people like cigarettes do, it should not be protected. These products should not maybe made, and companies should not be able to make that profit. There was a similar discussion around coal mining in the past or nuclear power plants. We are, of course, evolving as a society, and we likely need to get rid of some things or improve others. And now smoking has, of course, been part of that debate for a very long time. There are smoking bans in many places already, including restaurants, but it seems the government is now willing to go a step further and see what effects higher taxes might have on this problem.
Yeah, trying to raise money also in the process, but we'll see how they find the balance to it last. Thank you so much for this update.
Thank you, Ini.
Now, China-Africa CEO Forum held alongside the 4th China-Africa Economic and Trade Expo brought together business leaders, policymakers, and innovators. They discussed strategies for deepening economic ties between China and Africa. And the event featured, as you'd expect, high-level panel discussions, keynote speeches, and our own Ladi Williams has been there capturing all of that and put it together in this report.
All roads lead to the Changsha International Conference Center as the D-Day arrives, located in Changsha's high-speed railway new town with a total area of 212,700 square meters, boasting of a design that combines traditional Chinese aesthetics with Hunan's cultural elements. Executives and policymakers make their way into the hall.
Well, I can feel the energy right here. It's charged right here in Changsha, China, and we see conversations are moving along at this point, and it's still all about China and Africa at this point.
First off is welcome speeches from policymakers from China and Africa.
Ghana and China enjoy a strong, evolving economic partnership, and China remains Ghana's largest trading partner, with bilateral trade between the two countries reaching a whopping $11 billion in 2024.
These are the trends we're seeing, and these are the trends we want to encourage. Let the story of China and Africa not be told in the language of extraction. but of elevation.
Chief Diana Chen, Chairman, Choice International Group, highlights the importance of relationship between Africa and China, making a case for more collaboration in a welcome address. Then it was time for knowledge sharing and roundtable discussion, with panelists made of leaders in capital markets and financial services. Top on the agenda is how financial institutions are innovating to grow Africa-China capacity.
Usually, when you have a middleman role, you expect that that middleman will add value. And therefore, whatever it is that you pay to the middleman makes sense.
How do you open Chinese capital into Africa, financial capital now, and vice versa? This could be everything from the way around dual listings. How can we get corporates from Africa, whether they're local corporates, whether they're Chinese corporates, to be able to raise capital through dual listing mechanisms with exchanges globally, or the reverse?
Focus then shifts to energy and how enterprises can leverage green energy for sustainable development.
Building, at some point, the
CEO Oando Energy speaks on what the company has done so far.
Infrastructure, moving gas from the southern part of Nigeria across the southwestern region, providing gas for industrialization. And then we moved into the drilling business, buying 5 swamp rigs at a time, and just building local capacity for expanding indigenous play within the oil and gas sector.
And then the icing on the cake, launch of the Fund for In-Depth China-Africa Economic and Trade Cooperation and other agreements.
Laddie Williams, reporting for Channels Television News.
All right, let's go to Egypt, where that country has secured $479.1 million in financing to develop a 1.1 gigawatt solar photovoltaic power plant integrated with a 200 megawatts battery energy storage system, and this to accelerate its renewable energy transition. The financing was provided by the European Bank for Reconstruction and Development, that's the EBRD, the African Development Bank, AFDB, and the British International Investment, BII. The project, developed by Scatec through its subsidiary Obelisk Solar Power, will help stabilize Egypt's energy grid and reduce reliance on fossil fuels. This aligns with Egypt's 2030 renewable energy target of achieving 42% renewables in its power mix. And Botswana's Vice President and Finance Minister Ndaba Golate is set to sign a landmark country partnership framework with the OPEC Fund for International Development, and this happening during a working visit to Austria this week. In a statement on Monday, the Botswana government said that they would be in the Austrian capital, Vienna, this week to attend the 2025 OPEC Fund Development Forum. That's supposed to hold from tomorrow. It said that the agreement covering the period 2025 to 2029 would establish a roadmap for cooperation in priority sectors. The CPF would be a significant step forward for Botswana in mobilizing high-impact investment and strengthening global development partnerships. Let's head to the crypto space now and see what's happening. Looking at the price, I think it's a good place to begin. So it's green for this afternoon, 106,790.99. That's the price of Bitcoin. And we see it's mostly green for even the altcoins, from Ethereum that has gone past 2,500 is now at 2,600. So XRP, Hype, and most of it is in the green. Now let's look at the headlines for this afternoon. The delisting is number one. Coinbase said they will launch a crypto credit card on MX network. We see more banks in different countries adopting cards connected to cryptocurrency. We saw the American Express, that was last week, and now we're seeing Coinbase is launching cryptocurrency credit card also. So other than that, I believe there's a delisting, major exchange to delist 16 cryptocurrencies. That's also another news there. That will take place June 20. between 8 a.m. and 10. Deposits for the delisted asset have already been suspended, and users are encouraged to manage or remove their holdings as soon as possible. September 20, they say, will mark the end of withdrawals, providing time for asset recovery. So you want to find out if any of your assets is involved in these 16 cryptocurrencies, and then perhaps you want to get that out. And crypto inflows, we see hit $1.9 billion as investors defy geopolitical. You know, the crypto community have been talking about how they think that crypto should be the next gold, the hedge. We see gold soaring where there's uncertainty and geopolitical issues. So they're hoping that that could happen. So I wonder if it's beginning to happen. Latest CoinShare report shows that crypto inflows hit $1.9 billion last week, marking a powerful display of investor confidence, even as geopolitical risks intensify. This is the 9th consecutive week of inflows, setting a new year-to-date record. Let's talk to Rume Ofi now and see what he thinks about this. Hi, Rume. Good afternoon and welcome to the program. Rume, I think you're on mute. I cannot hear you. Rume, can you?
Good afternoon.
Okay, yeah, great.
Good afternoon.
Yeah. So I said this investors' confidence, $1.9 billion. I'm sure that excites the crypto community.
Yes, it's a process, and it has started already for naysayers, or those that don't doubting Thomases. They need to understand that this industry is growing, and it's growing very well. And the best thing to do is just to position yourself much, much better with knowledge to be able to take positions. When I mean position, I don't mean leverage trading, and so I mean investments in terms of infrastructure, in terms of building products that can help the entire industry grow. Fortunately for Nigeria, it's making a whole lot of sense right now that the government, in fact, I must give kudos to this current government. Away from other governments, this government is the only government that have actually gotten more involved with what is said about improving the cryptocurrency industry and having to make a softer landing in terms of making the international perception about this country change significantly. It's a process, and I believe all of that put together is going to make our country even more better. I'm kind of selfish about Nigeria now because it's one industry that we're very passionate about, and we're hoping to see that it grows beyond bounds.
Yeah, I knew you would try to rub that in, Rume, but I think another good news for you is that the Nigerian Financial Intelligence Unit has announced that the country has made substantial progress in implementing its action plan under the Financial Action Task Force, as the FATF, and they say that the country is making progress, and of course this, will bring some smile to your face.
Exactly. From the ISA that was actually approved by Mr. President in April, this is very deliberate to blow our trumpet as a country, and also for the effort of Mr. President and also the SEC for all they've been doing, and also NFIU to make sure that we have very solid ecosystem void of anti-money laundering and terrorism financing, to be able to go down. A couple of all of these exchange platforms are putting measures in place so that we don't have people moving from public funds, peradventure, or funds to fund terrorists. It's making sense. And also, if you look at the virtual asset service provider rules and regulation that is being now coordinated by the SEC, all of that are guidelines to make sure that we have very, very good perception outside of the country. So all of that has a way of making us look really good, and the Financial Action Task Force, which is FATF, will now make us part of good news for them to take us away from their grey list. This is the process, and all of this is taking really good momentum. And I'm loving it really because it gives us opportunity for international organizations in the crypto space to be able to come in to this part of the world to see opportunities that could also move our economy forward.
Yeah, well, let's hope that after the on-site assessment, we'll actually get the mark, to be out of that grey list. But Rume, thank you so much for your time.
Thank you very much, Amy. Always a pleasure.
So that's it on the program. Thank you so much for being a part of Business Incorporated. It's just a new week. It's just Monday, so we still have, some time to spend together all through the week. And we hope you will be there for us when we're here. I'm Ini John Mekwa. Enjoy the rest of your day. I'll see you tomorrow. God's grace.